The sudden dawn of 2 nanometer mass production has just ignited a $4 trillion financial earthquake, threatening to leave every portfolio that ignores it in the dust. On March 1st, 2026, the global semiconductor landscape shifted fundamentally as TSMC and Samsung officially flipped the switch on their high-volume 2 nanometer foundries, promising performance gains that make current hardware look like relics of a bygone era. This technological leap caused Nvidia's stock to oscillate violently, hitting $1,200 per share before retreating as investors struggled to price in the sheer cost of this transition. For David, a high school teacher who invested his modest savings into semiconductor ETFs, the morning was spent staring in disbelief at a red screen that wiped out months of gains in minutes. The immediate consequence of this volatility was felt when David had to call his daughter's summer camp to cancel her deposit, as the sudden liquidity squeeze on his portfolio forced a hard look at his discretionary spending. The stress of the market's reaction to the 2 nanometer shift is no longer a theoretical debate among analysts. It is a kitchen table reality for families relying on the stability of tech giants. As the first week of March progressed, the supply chain felt the immense pressure of ASML delivering their latest high-end AEUV lithography machines, each costing a staggering $380 million. These machines are the only path to 2 nanometer precision, but their arrival has created a bottleneck that is starving smaller tech firms of capital and attention. Sarah, who runs a boutique cloud rendering startup, found her hardware upgrade cycle completely derailed as priority shifted to global giants like Nvidia and AMD. The ripple effect was devastating for her small business, as the lack of affordable high-end chips meant she could no longer compete with the processing speeds of larger conglomerates. Consequently, Sarah was forced to freeze all new hiring for the year, a move that left her existing three-person team overworked and visibly burnt out as they struggled to maintain their aging servers. The cost of entry into the 2 nanometer era has effectively created a two-tier economy where those without billions in cash reserves are being systematically pushed to the margins. By mid-March, Nvidia announced that its first 2 nanometer-based AI accelerators would yield a 25% increase in gross margins, a figure that sent institutional analysts into a frenzy of revaluation. While the top-line growth is impressive, the internal pressure to deliver these yields has reached a breaking point within the engineering departments. Mark, a senior retail trader who would leverage his retirement account on Nvidia's promise, found himself checking his phone every 5 minutes during his 10-year anniversary dinner. The obsession with the ticker symbol has eroded his personal life, leading to a heated argument over the dinner table when his wife realized he was more focused on pre-market futures than their celebration. The consequence was a palpable tension that ruined the evening, a stark reminder that the high-stakes world of 2 nanometer chip stocks demands a psychological price as high as its market valuation. For many like Mark, the pursuit of tech-driven wealth is resulting in a total loss of work-life balance and increasing emotional fragility. AMD's strategic pivot to integrate 2 nanometer technology into its consumer-grade Ryzen processors by March 20th, 2026, aimed to grab a 15% market share from competitors, but the rollout faced immediate manufacturing hurdles. These delays caused a spike in the secondary market for older 3 nanometer chips, as consumers realized the newer technology would remain out of reach for months. Elena, a freelance graphic designer who relies on high-speed rendering to meet her deadlines, found that her current workstation was no longer sufficient for the new software versions optimized for 2 nanometers. Without the funds to buy a marked-up new system, she was forced to sell her high-end camera equipment just to pay for a mid-tier upgrade to keep her business afloat. This forced liquidation of her professional tools has significantly limited her creative range and added a layer of financial insecurity she hadn't felt in years. The transition to 2 nanometers is not just a technological upgrade, it is a financial barrier that is stripping independent creators of their assets and forcing them into desperate survival tactics. The global economic ripple effects of 2 nanometer production became evident as data centers reported a 40% reduction in power consumption, yet the initial hardware cost outweighed these savings for the first 3 years. This paradox has led to an increase in service fees for cloud storage and AI tools, directly impacting the monthly budgets of middle class families. John, a suburban father of three, noticed that his family's digital subscription costs had climbed by $60 a month as companies passed the 2 nanometer development costs onto the consumer. To compensate for these rising tech taxes, John had to postpone a long-awaited kitchen remodel, leaving his family to deal with a broken stove and dated appliances for another year. The visible consequence of this tech-led inflation is a home environment that feels increasingly neglected despite John working longer hours than ever. As the high-tech sector booms on the backs of 2 nanometer efficiency, the average household is finding its purchasing power eroded by the very innovations that were supposed to lower costs. Institutional sell-offs accelerated toward the end of March as hedge funds rebalanced their portfolios to mitigate the extreme risks associated with 2 nanometer yield rates. A massive $50 billion exit from Semiconductor mid-caps occurred in just 48 hours, creating a vacuum that sent shockwaves through regional banking sectors. Linda, a pension fund manager, found herself in emergency meetings as the volatility threatened the retirement security of thousands of municipal workers. The pressure to maintain fund performance led Linda to implement drastic cost-cutting measures within her own office, including the firing of the longtime cleaning staff and the cancellation of all employee wellness programs. The human impact of these high-level financial shifts is felt by those furthest from the trading floor, as low-wage workers lose their livelihoods due to a spreadsheet adjustment. Linda's visible exhaustion in the sterile, uncleaned hallways of her office serve as a grim testament to the collateral damage of the 2 nanometer stock race. The consumer reality of the 2 nanometer transition hit the retail market on March 25th, when the first flagship laptops equipped with these chips were priced at a prohibitive $2,500. This price point effectively locked out a generation of students and entry-level professionals from the most efficient tools required for modern engineering and design. Kevin, a graduate student specializing in machine learning, realized his research would be significantly delayed because he could no longer afford the hardware necessary to run 2 nanometer optimized simulations. To bridge the gap, Kevin took on a second job as a late-night delivery driver, sacrificing his study time and physical health to save for a machine that cost more than his semester's tuition. The visible consequence of this struggle is Kevin's hollowed-eyed appearance in morning lectures and his frequent reliance on caffeine to stay awake during critical lab hours. The 2 nanometer revolution, while a marvel of engineering, is widening the digital divide and forcing the next generation of innovators into a cycle of debt and physical exhaustion. As the market closed on March 30th, 2026, the semiconductor industry had solidified its new hierarchy, with leaders like NVIDIA showing a 12% monthly growth despite the extreme volatility. However, the long-term outlook for the middle class remains precarious, as the high cost of this innovation becomes permanently baked into the global economy. The Millers, a retired couple who had hoped to travel during their golden years, were forced to recalculate their entire retirement plan after their tech-heavy portfolio failed to recover the losses from the mid-month dip. The consequence of this financial instability is a quiet, somber life in their small apartment, where they now spend their afternoons looking at old travel brochures instead of booking flights. Their story is a microcosm of a world where technological progress moves at nanometer speeds, but the human cost is measured in years of lost dreams and deferred stability. The 2 nanometer era has arrived, and while the chips are smaller and faster, the burden they place on the average person has never been heavier or more visible.